What is the Kikoff app used for? You hear the name. Maybe your kids or grandkids are talking about it, or maybe you saw an ad online promising to magically boost your credit score for a few dollars a month. And you are sitting there wondering, what on earth is this? Is it a scam? Is it a gimmick? Or is it something that you, at this stage in your life, actually need to care about? Let me tell you right now, your credit score does not go into retirement just because you do. This is a massive point of vulnerability for so many people who are about to retire or who are already retired. You think, Susie, I paid off my mortgage. I don't owe anybody a dime. My credit must be perfect. Wrong. Absolutely wrong, and that misunderstanding is exactly what can cost you thousands of dollars when you least expect it. When you stop borrowing money, when you stop using credit cards, your credit file goes cold. It becomes what the financial world calls a thin file. If you have no active loans and no credit card activity, your credit score can actually plummet or vanish entirely. Then what happens? You decide to downsize your home, and you need to sign a new lease for an apartment. They run a credit check and you get rejected. Or you need to buy a new car because your old one gave out and the dealership wants to charge you an outrageous, predatory interest rate because you have no history. Or worse, your auto insurance premiums skyrocket simply because insurance companies use your credit score to determine your rates. It is a system that punishes you for being debt-free. It makes me so angry, but you have to know how to play the game to protect your hard-earned money. This brings us directly to Kikoff, spelled Kikoff. What is it used for? It is a financial technology app specifically designed to build or rebuild your credit score. It is a credit-building tool. But before you go downloading anything, you need to understand exactly how it works, what it costs, and whether it makes sense for a retiree, because this is not a traditional credit card, and it is certainly not free money. Think of Kikoff as a simulated credit environment. When you sign up, you do not get a piece of plastic mailed to your house that you can take to the grocery store or use to buy gas. No. Instead, Kikoff opens a revolving credit account in your name. For their basic plan, which costs $5 a month, they grant you a $750 line of credit. But here is the catch, and listen to me closely. You can only use that credit line inside Kikoff's own online digital store to buy small things like ebooks or educational materials. Why would anyone do that? Because of how the credit scoring system is structured. 35% of your credit score is based on your payment history. Another 30% is based on your credit utilization, meaning how much of your available credit you are actually using. The lower that percentage, the better. So, Kikoff sets up a system where you buy a digital item from them, say for $10 or $20, and you pay it back in tiny, $2 monthly increments. Because you have a $750 credit limit and you only owe $10, your credit utilization looks phenomenally low to the credit bureaus. Every single month you pay that $2, Kikoff reports that on-time payment to the major credit bureaus, Equifax, Experian, and TransUnion. To the computers analyzing your financial data, it looks like you are managing a line of credit beautifully and responsibly. There is no credit check to sign up, which appeals to people whose credit has taken a beating from a past medical emergency, a divorce, or financial hardships. There is no interest rate charged on the balance, and there is no upfront cash deposit required like you would find with a traditional secured credit card from a bank. It sounds easy, right? It sounds like a no-brainer. But you must stand in your truth and look at the actual cost. At $5 a month for the basic plan, you are paying $60 a year just to have this company report positive data to the credit bureaus. They also have higher tiers, premium and ultimate plans that cost $20 to $35 a month, which give you larger credit lines, rent reporting services, and fraud insurance. But let's stick to the core concept. You are essentially paying a subscription fee to manufacture a good credit score. But hear me on this. Tools like this only work if you are flawless with your execution. If you sign up for an app like Kikoff and you forget to make that $2 payment, or if the credit card you linked for autopay expires and the transaction fails, Kikoff will report a late payment to the bureaus. A single 30-day late payment can cause your credit score to drop by 50 to 100 points instantly. You would be paying a company to ruin your credit instead of building it. It happens to people who set it and forget it without paying attention. You cannot afford to be sloppy with your finances at this stage in your life. If you decide you need to build your credit, your actionable takeaway today is to first check your actual credit report for free at annualcreditreport.com. See where you stand. If your file is blank or your score is dangerously low, and you decide to use a tool like Kikoff, start strictly with the lowest $5 a month basic plan. Do not let them upsell you into the $20 or $35 tiers unless you have a specific, immediate need for something like rent reporting. The moment you open the account, you must set up autopay, and you must verify every single month that the payment cleared. Treat it with the same seriousness as a mortgage payment. Use it for 6 to 12 months to establish a base, and once your score improves, transition to a no-fee, traditional rewards credit card that you use only for fixed expenses, like a utility bill, and pay off automatically every single month. That is how you build a pristine credit score without carrying debt, and that is how you protect your financial freedom in retirement. Stay strong, be smart, and secure your future.